So what is going on, ladies and gentlemen? Welcome to my channel. It's a brand new channel. So today I'm just going to show you how I approach the market, how I analyze the market, how I trade using smart money, and how I go about analyzing the market. So without wasting your time, what I like to do, let me just first delete all this so we can have a clear template so that I can show you from the beginning how I do analyze the market. So first of all, I normally go back to the daily time frame. So like really I don't the only time frames that I commonly use are the daily, the 4 hour, and the 1 hour. Sometimes I might go down to the 15 minutes maybe to refine my entries, but I really don't go below that. That is how I trade. Other people could trade differently, but this is what I've found to work for me. This is what I've found that has been working for me much more consistently. So in the daily time frame, what I do, I don't like really do much. I just go to the daily time frame to see the current market direction. So in this case, I wouldn't really bother with what went on back here. I would only be concerned with this area, and to be precise, I would like maybe try and see what happened in the previous week or so. So like we can see in these recent days the market has really been bullish, so we can only expect that the market will continue to rise up. So from that is all that I do on the daily time frame. From there I go down to the 4 hour time frame. That's where I do like most of what I do to analyze the market. So in the 4 hour time frame, I already know that the market is rising up, is on a bullish trend. So what I like to do, since the market is on a bullish trend, we always expect the market is making higher highs and higher lows. We are expecting that the market is expected to create like say higher highs and higher lows, like to move this way. So for me, what I like to do and what I found to be working most of the time is like I find a point where the market like took our liquidity and went on to you know, on its original trend. So in this case, for example, I always look at the point where like the market took out this point, and went on and pushed on further. For example, now like say the market took this low and pushed further to break this high. So that is what I am looking for. That is the only setup that I trade, and I found it to be like the most consistent or working what should I call it, setup that I used, and that is the only thing that I trade, and it's been working wonders for me. So in this case, we can see clearly that the market is on the rise, but it came down here and took out all this liquidity, you know, all this liquidity and pushed up even higher. So I would mark this point. As a point where price took our liquidity, and I would mark it so, like so, yeah. Then after that, I would find a place that after taking out this liquidity was the high that the market took out. So in this case, I would mark this point. Some people would call this a break of structure, yes, and I would name it a break of structure, like so. After doing that, now as you come to notice that liquidity is what drives the market. Some people go further to say that liquidity is like oxygen to the market. So the market can't really make those big sweet moves without taking any liquidity. So as we were going to break this structure, I would always try to find like what is the kind of liquidity that the market made. And we have we have different types of liquidity. We're going to cover them in the upcoming videos. So in this case, we'll see that the market created what we call the trend line liquidity. So like below these points, this is where people's stop losses are. And for my trading style, or how I trade, I would like to see the market come down, take out all these before it pushes even further up. So in this case, I would mark this as my liquidity, taking into consideration that in my mind that the market really, if I really need to like trade or take any buys, I really need to see the market come and take out all this liquidity before it pushes back up. Yeah, so after that, after I've marked my liquidity points, or sometimes I would even do this just to show me, to have a clear view of like a point where the market really needs to cross for me to be like really comfortable and say that market has taken out all liquidity. So from that point, I have high chances of getting a good buy. So after I have identified my liquidity points, points where markets really need to cross for me to say that liquidity has been taken. After I've done that, then I would look for any imbalances. Yeah, look for any imbalances. Yeah, these imbalances are market inefficiencies. Yeah, these are not supposed to happen. So when this happens, the market will always try to come back and fill these gaps. They are called market inefficiencies or gaps. Some people call them gaps. For now, if you find that if you'll be hearing any terms that you don't understand, you can just Google them or YouTube them. Because I've not really covered this I've not really covered imbalances or any other things that maybe I'm going to talk about in these videos. But for now, you can just YouTube them and you find clear explanation. So after I have identified an imbalance, I will always try to find an order block. After I've identified the imbalance. So in this case, this is an imbalance, a gap, or a market inefficiency that the market really need to cover, so before it resumes to its original in its original trend. So below an imbalance, I was try to find an order block. And for a buy setup, an order block is a last sell candle before the market pushes up. Yeah, so in this case, this is my order block. But I will just what I like to do, I always like cover the entire zone. Like in this case, I would mark my zone from there all the way down here. I know some people like we only cover this area, but it's safe to cover this entire area as your order block zone or buy point. And I would like to mark this as my area of interest. So once the market comes down and taps or enters this zone, I am ready to take my buys. So after that, I find my target now. My target price points. My target take profit would be up here. My target take profit would be up there, because I'm in anticipation that the market is after tapping this zone. After tapping this zone, will rise even further. So I'm expecting that the market will tap my TP. So you can even go down to a lower time frame, so I can go to the 2-hour time frame and see what's happening there. So from here I can set now my pending orders, or I can try to see my risk to reward ratios, if it's really worth it, or maybe if there are some further refinements that I need to do. So in this case, I would just mark my entry points, my targets, and even my risk, so that I may just to find out if it's a good trade. Now this is a 80 pips risk to 215 pips pips profit, which is 1 to 3. For some people would be okay to risk 80 pips. Really, it boils down to the kind of lot size that you use. This can be really okay. For me, 80 pips is quite okay, because the risk to reward ratio is really fine. But if you don't have like that much of a big account, or if you don't want to risk that much pips, or you can just go down to the 1 hour and refine it further. Just try and look for an order block, maybe refine it further, and maybe try to see an order block that will maybe suit you, that will maybe help reduce the risk. So in this case, maybe you can just put it there and see, like your entry would be there, and maybe your risk would be now 55 pips for a target profit of 300, which is a 1 to 5 risk reward ratio, which is not too bad. You can even go further back to the 15 minutes and try to refine your entries further to reduce your risk. But really, for me, I always end up to the 1 hour. Risking 50 pips for me, it's okay, depending on your appetite. Depending on your appetite or your trading style, you can just refine it further. So really, as my first video, that is what I wanted to cover. So this is Euro NZD, Euro New Zealand, and I am expecting that that if price manages to come all the way down here and tap our zone, I am expecting that price will push even further up. So really, this is how I do my analysis, and I wanted to cover that as my first video. So welcome guys to my channel. I'll be covering more things and more concepts as we push further. For now, I would really love if you support this channel and subscribe. Otherwise, I'll see you on the next video. Bye.